Well, happy Monday to you. Thank you for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Always a pleasure to visit with you about our ag commodity trade. And Tammy mentioned earlier, it was an up night in the Globex trade. All the grain markets were a little higher. In fact, let's take a look at the last trades here. We'll go to the corn board here first, and we'll take a look at our quotes provided by Bar Chart. So when we wrapped up overnight, the December contract on corn was 4.25 higher at 5.18. Now, it was fairly strong, but you have to admit it was off of its earlier overnight high by 8.5 cents. So keep that in the back of your mind. We were within 2.5 cents of our low of the overnight trade there. And if you look at soybeans, well, we had the August contract up 11.75 at 14.92, September up 13.25. And your November new crop was 12.25 higher. It finished at 13.83, about a nickel off of its overnight high. Now, the leader at times seemed to be the wheat complex with the news out of the Black Sea region. And you have the September Chicago wheat 18 higher last night at 679.5. But that was a dime off of its earlier high last night. It faded away. In Kansas City, you had September, after hitting 847, it closed at 845.5. That was still 16.5 cents higher, so way off of its lows of the overnight trade by about 20 cents or so. In Minneapolis, spring wheat trade, you had the September contract 13.5 higher at 897.75. It got as high as 899, didn't quite hit $9, but December did. December got all the way up to 903.25 on the close, and that was on the high of the evening session, and it was up 13.75 cents. Now, on the cotton market, where did we trade there this morning? On December, we were 32 points higher at 81.54 per pound. Well, let's bring in Brian Hoops and talk about all this. He's the president of Midwest Market Solutions. By the way, I noticed it looked like you were in line to get a little rain over the weekend. Did you finally get some there?
Yeah, we certainly did, Marlon. Good morning. About over an inch of rain or so. A lot of wind coming through this part of the country as well. A lot of trees, limbs down. So it was not without some damage, but certainly the rain is going to be beneficial because it's going to be back into the hundreds this week for crops in this area. It's going to, definitely put a pinch on some of those areas that did not receive that rainfall. It's really going to cause some stress and some damage. Livestock going to be stressed as well this week with that, high heat, high humidity, and a very high heat index.
Okay, so now what do we do with the markets now that they are so volatile and we are right in the peak of our growing season right now? I mean, the corn is pollinating in most areas. It may be done in some areas. Soybeans are just rapidly approaching their peak growing season. Now, what do we do for protecting our price?
Yeah, so good question that you bring up. A lot of producers looking at that same type of scenario, wanting to know what to do with protection as far as their prices go. Well, we went over $6 a few weeks ago in the corn, and producers said, boy, if I ever get a chance to go back up into that area, I'll definitely be doing some selling, buying some put options, doing something. They're really looking at that 590 area as a kind of a turning point in the market from the standpoint they have crop insurance below that. So there may not be a lot of incentive for some producers to do anything until they get to that area. It kind of depends on what type of yields you're looking at receiving this year, and that's going to be varied. Of course, news over the weekend that Russia is backing out of the grain export agreement. That ends today. That is real bullish to the wheat futures. If you're a wheat producer, I think you really have to look at long-term resistance on a weekly chart. For example, it's another 50 to 75 cents higher in Kansas City and Chicago wheat. We have poor demand. That's probably not going to change. And these rallies that we see are going to be seen as selling opportunities. Don't get real bullish, but sell out your inventory into these resistance points. Same thing in the corn market. We had a bullish reversal yesterday, but yet we're going to have a lot of crop to be harvested. There is enough rain around that's going to give us an average type yield, not a great one, but it's going to be enough. And our demand is slow enough that rallies are meant to be sold in these market environments.
All right. What's the last you've heard about the production coming out of Brazil on soybeans and safrinha corn?
Yeah, the corn crop actually was upgraded on Friday just very slightly, maybe 1.5 million tons, but it's another size increase. It means they're going to have more export opportunities. The soybean crop was actually lower just a little bit, but just a very fractional amount, so not going to change their export commitments substantially, but it is, it's going to be more burdensome because that corn crop continues to increase in size as they get into their harvest.
Okay, we'll discuss our livestock trade to open up the week. We're talking with Brian Hoops, and we'll be right back. All right, we're talking with Brian Hoops of Midwest Market Solutions. Brian, when I looked at the notes from Friday, as far as the cash cattle market, it sounded like hardly anything budged again. It sounds very quiet out there. I don't know if you can get any direction from that or not. What did you hear?
You're right, Marlon. There wasn't a lot of movement, and we did have a decent kill week last week, 633,000 head. But as far as last week's movement, pretty slow. That's probably going to translate to a much slower kill week this week. Packer margins have actually gone negative now, about $16, $17 a head. So it's not a surprise that until these boxes start to prop up and move higher, they're not going to be very enthusiastic about killing large amounts of cattle. So the futures market had a very wild week last week, very strong gains to end the week. I would suspect we give some of that back early dealings this week and kind of assess these show list numbers and where the cash trade is going to filter out. For best we can tell, it was a very wide range, very volatile week in the cash markets as well as the futures. You're looking at maybe $1 to $2 higher in the north and mostly steady in the southern plains.
What about Packer margins on the hog side? How are they running?
Well, they're doing much better there. The cutouts have been coming up. They were sharply higher on Friday once again. The futures market has been coming up along with the cash, so your futures are very close to the index. I believe July futures go off the board today, and they relinquish ownership over to the August contract, and it's pretty much in line with that lean hog index because the cash markets have, as I mentioned, been moving higher.
Let's take a look at the futures then, and just to set a point of reference for our start here today, we'll look at how we closed on Friday. And on the live cattle board, our quotes are from bar chart. We had the August actually having a very strong close on Friday. It was up $3.27, if you recall. It finished at $180.17. That was 20 cents from its high of the day. October live cattle, they closed Friday $2.52 higher at $182.62. The nearbys were leading the way on all the contracts there. And don't forget on the feeder cattle market, as we look at those, now they were higher across the board. Actually, the strongest was way out there in January. It was $2.05 higher. But the nearby August gained $1.65 Friday. It closed at $246.65. That was $2.65 off of its earlier low. September was up $1.90. And on the lean hogs, we wrapped up last week with the August down 30 cents at 96.20. The deferreds beyond that, 20 to 30 higher. Brian, thanks for the help. I appreciate that, sir. We'll talk with you again. Brian Hoops of Midwest Market Solutions. So, Tammy, we're all set to begin today. As you alluded to earlier, as some people will say, had a higher trade overnight. We'll see how much we can add to it, if any.